Our panel is going to be made up of eminent personalities. I will just do a quick rundown of their bio in no particular order of preference or seniority. One of them is a parent. You got the joke. Okay, the rest didn't get the joke. They'll get it later. This person is academically grounded at École Nationale des Ponts et Chasseaux à Université de Paris à Panthéon-Sorbonne. If you don't understand, he will explain when he comes. He's French, and he's schooled at the University of Paris in Panthéon-Sorbonne. And his work centers on modeling market behavior, pricing dynamics, and risk under uncertainty. In practical terms, his work aligns with route-to-market style financial innovation context, where advanced mathematical models are embedded into trading systems, pricing engines, and risk management platforms. He is the managing director of a brand that many of us have consumed growing up, Fan Milk, Fan Yogo. Their bicycles and their trucks used to enter our streets. So that's a clear indication that they got their route to market strategy well. As children, whenever we see our parents and we see the bicycles, our parents try to pull us out of sight once the bicycles are coming because they know that it is going to make them get a debit alert. They've been around for 65 years. How many of us ever took Fan Milk? Fan Milk, if you didn't take Fan Milk, they will bring for you to take today. How can you come to the world and not take Fan Milk? It is a sin. It is an offense. It is a crime. Fan Milk has been here before many of us. Is there anybody here who is over 65 years old? So Fan Milk is older than every one of us and has nourished us at one point in our life or the other. Ladies and gentlemen, let's welcome Mr. Lionel Parents. Lionel Parent. Lionel Parents. How many children do you have, sir? Thank you very much. You can sit there anywhere you like. Thank you. On that panel, we're also going to have a senior business leader with a quarter of a century experience in driving growth and transformation across Europe and Africa. He's got a proven track record of delivering sustainable results in volatile, resource-constrained environments. His expertise spans strong commercial leadership, operational discipline, and execution excellence. He is passionate about building resilient organizations, delivering people, and creating long-term value in emerging markets. His name is Mario Russo. Please put your hands together as I welcome Mario Russo. Capisco Italiano? Yeah, so my name is Babajide Bensini. I'm actually Italian, but I flew in this morning to do this job. Our next panelist is the man that we all listened to earlier on. Ladies and gentlemen, he needs no introduction. His delivery has introduced him already. He's the vice chairman of TGI Ala Group, professor of marketing and Global Business Strategy, Professor Farouk Gomel. Vice Chairman, TGI Group, you're welcome, sir. And the moderator of the panel is none other than the convener of the Route to Market Summit, Mr. Godson Nkem Kalonye, and he will be asking these marketing and strategy eggheads questions about route to market. So please get your pens and papers ready as the session begins. And the last but not the least is an accomplished board-level executive with over 2 decades of international leadership experience across general management, sales, supply chain, marketing, and business turnaround in leading multinationals such as Procter & Gamble, SC Johnson, and currently PZ Cussons. He was one of our speakers last year. His name is Ohale Eloeni. He'll be joining us while the panel is on the way. Mr. Nkem Kalonye, over to you, sir.
Thank you very much. Jide, expect that by now you should know how to pronounce my name. Abuki class. Good morning, everyone. Thank you for having us here. I'm proud to announce that on this panel is probably the strongest team you will find anywhere in the region. Combined experience of over 60, 70 years sitting here. And these are people who have done it. So in this session, we'll be examining how commercial teams can leverage pricing structures, trade financing, retailer engagement, sales consistency, and distribution reliability as a strategic tool to build trust, strengthening market relationships, and drive sustainable route-to-market growth. Our first question will be a general question, and I would have each of the panelists have a go at this question in no particular order. By the way, thank you, Leonard, for coming all the way from Ghana. Thank you very much, and Mario as well. We value your time, and we look forward to doing more with you beyond this event. And of course, to our keynote speaker, someone I have very deep respect for, thank you very much for coming to this event. Thank you, sir. So my first question will be, why has trust become the ultimate competitive advantage? And how can organizations intentionally build, measure, and scale trust? And I'll start with Mr. Farouk.
I just said it now. Like I said, it's always important to touch the human side of everything. And when you talk about trust, it's man to man, woman to woman, community to community. And so ultimately, I see it as I like to know people, I like to understand people, I like to see the face behind anything that I'm doing. And I think if you have that relationship and that understanding, at least at my level, you are able to work together with your team to ensure that delivery has a human touch and a human face to it. So, like I always try to, and you and I have had so many different sessions, and I think this is the first time I've actually seen you in Lagos, because I always say, come to Kano and let's sit down together.
Yes.
And when you come to Kano, I gather people for you and I say, speak English and let them respond. And so it's always important for me to at least provide that platform to allow people to engage, and that is how trust is built, and that is how you have become a trusted friend and a trusted advisor and a trusted service provider to me. So thank you.
Thank you very much, sir. So, I mean, true to your word, every time, this is the second time, by the way, we are meeting in Lagos. Yeah, so, yes, Mr. Farouk is very relational, so he wants to touch and feel, hear you. Those kind of things you can't put in databases, I suppose, is what he pays attention to. So thank you for that honest answer. To take the next question, I'll have to come back to you, Lionel. We would like to hear your perspective. Judging by your experience, you have very extensive experience working in the region, driving the dairy industry. What's your story, and how have you been able to scale trust within your business?
Now, scaling trust, we have this concept of the 3I and T. So 3I, I for intention, I for interest, and I for integrity. Intention, your partner trusts you if you give them a clear vision of where you want to go. It's not the vision that sits in a nice PowerPoint or in the office. All the way down, in our business model in Fanny Milk, all the way down, our partners, the street vendors, the micro distributor, they know what is our ambition. They know where we want to go. They know how we are going to go about it. So it's come down to clarity. Then intention. do we have always their intention at heart? You know, it's not only about us making profit and growing, it's also about putting their interest at the core of what we do. And thirdly, integrity is like, do we walk the talk? Because, you know, a lot of people talk about integrity and value, but when it comes to our partners, do we walk the talk? Do they believe that they can trust us? So that is extremely important. And to measure that, do they behave in a way they trust us? You know, we know it in our beautiful region, it all comes ups and downs. So right now, currency are being stable. It will come down again, we know it. So in difficult time, do they behave in a way they trust us? As Mr. Farouk mentioned, the relationships, the capital relationship is critical. Do they hold the inventories that we ship to them because they trust that we are going to help them moving out that stock, out of their warehouse, out of their outlets? So that are the three ways.
Thank you very much. So you mentioned three things: intention, interest, and integrity. And lastly, the T is for transparency. Transparency. How are we transparent with the trade? You know, not cutting corners. How are we transparent with everybody? Also telling to the, I mean, not telling, but sharing with our partners what is the reality sometimes for our businesses. We had this situation in Fan Milk in Ghana back in 2024, that the trade was convinced that we were capturing 100% of the profit. Nobody was telling them that this company is actually loss-making. So at the point that we gather in a hotel room like that in Accra, and we show them, this is the situation of our company. So we have been for 65 years together. How can we continue to keep that company flowing? And most of the customers are actually shocked and surprised that we are not making money. But it came to their minds that we were making money and we were squeezing their margin more and more and more. So putting that fish on the table unlock a lot of trust. And then we also show them the state of our facilities and factory, that we are going first to reinvest in our facilities if they want to get product available with high quality all the time. So building that trust, being transparent, and also we are fully transparent how much margin we are making. They're also like, and we keep sharing that with them nowadays. I mean, that's a fantastic experience of example of transparency. Sitting your supply chain and showing them your numbers. Yes. You know, it's novel. It's not the kind of things we see around here. And I understand from your feedback that you do value partnership. So you deal with your distribution line as partners, and you create a win-win situation for everybody. Yeah. Thank you very much for that. So the same question I'll pose to Mario. Mario, by the way, before you answer, I know I welcomed you, but you're not a guest. Mario is a Nigerian by marriage, so welcome home. So you have a go.
No, thank you. First of all, I would like to really appreciate the organization, all the sponsors, all the speakers, colleagues, everyone in the next 2 days, all the participants, and I'm very happy to start seeing like a full house, because it's really important, and especially to you guys that you are putting route to market on the picture, and I think it's one of the things that we really need in this industry. For me, it's one of the major strategic assets that we have in companies, you know, and somehow here and there often neglected a bit. I think we speak a lot about trust, but I think all of us, we agree that trust is important. But I think here what we are trying to do, as far as I understand from my colleagues as well, is going beyond that statement of trust, okay, is important. After almost 20 years in Africa, I always put this question, and I heard your story. I've congratulated before in the beginning for your trajectory in TGI. Is why certain companies, they really succeed, they continue to succeed, to grow, to build, and other ones, they struggle. And I think, and if we look at it, you mentioned just one category of products, for example, the seasoning side. We compete in the markets with similar prices, similar structures, similar systems, similar even ways how to activate the market, but not everybody succeeds the same way. And I think that's really, even sometimes companies with weaker capabilities, they are willing, they are able to succeed better than other ones that they don't have the same capabilities. So for me, I would say that trust is really a strategic competitive asset. I think the question was a little bit also like if you can sit on the balance sheet. I definitely don't think so. That's my own opinion. I think trust is not a slogan, is not a value statement. Trust is not really an accounting asset that you put on your balance sheet. It's really strategic and valuable. And why? I think for 3 reasons. Number one, reduce friction. Trust reduces friction. Trust accelerates execution. And trust contributes, in my opinion, to a sustainable competitive advantage. And I think you also mentioned a little bit that in your intervention. So, for example, when we think about brand equity, when you think about culture, I think you mentioned culture, and Lionel also mentioned culture. Leadership capability. Can we put that in the balance sheet? We can't. These are assets. They are unique assets from each one of these companies that operate in the market. And so the way that manifests trust, it's a very difficult thing because in my humble opinion, and I've been learning a lot, and I continue to learn every day, trust manifests through behaviors. And that's really difficult because when we look at our environment, we look at behaviors. For example, I can give some. If a distributor invests ahead of the demand, is he trusting us? Yes or no? It's clearly putting money ahead of his own needs, means that he's trusting this company. If a retailer adopts innovation very fast, is he trusting us? Yes or no? If a partner, and we will probably talk a little bit more, maybe I will talk a little bit more later, share information. Today, sharing information is something very unique. You talk a lot about Kano. I've been there many, many times. I think I can proudly say I'm a Nigerian that knows very well the country. Probably you need to ask me what states I've never been. It's easier for me to respond. But it's not only about, it's like all Nigeria. And that's really the beauty of it. Sharing information always have been when I arrive to Nigeria, say, no, that's not possible. People they will not trust you. And I think today is one of the biggest assets we have. Customers that share information with us. Collections, because we are in a market, let's not forget, trust is about cash as well. We are in a cash business. We are in a business that capturing cash is the most important thing we have. Without cash, there is no business. So can we capture cash faster than anyone else? That's trust. And ultimately, execution. If our execution becomes easier, means that we are really being trusted because we don't need to arrive to an outlet or to a distributor or to a partner, explain a lot. Okay, is that what you want to do? Please, go ahead, I trust. We can do it together and we are here to support you. So I would say that that's on the good side of trust, the positive side of trust. On the negative side of trust, because there is the flip side of all of that, is when we lose trust. And when we lose trust is exactly the same type of behaviors that we have, but on the other way around. So for example, customers, they start slowing collections, they lower the engagement, they are not willing to collaborate so much, they are more transactional behavior, and that signals often. I'm sure that there is some people here that have worked with me, they know me a little bit. I always say, this is the most important thing to read from the market is when the signals are really starting to come and we don't kind of like close ourselves in a shell, and we start blaming everything that is external. No, it's the weather. No, it's the competitor. No, the incentive is better. No, they invest more marketing. And that is really the dangerous part of this negative trust. So to end from my side, I think trust deterioration often comes more as a friction. We start seeing that friction. On the other side, trust really can help us to and explain our sustainable performance.
Thank you very much, Mario. As a lot packed in that response, if I have to dissect it, what I heard is every payment is a proof of trust, right? And trust removes friction. If your partners trust you, you will have less friction transacting. And when that system reverses, it's a proof that you're losing trust.
Yeah, and that's the dangerous part of the companies, that if they don't read that signs, that's really the dangerous part. And honestly, we have seen some examples of that, not only in Nigeria, but also in other countries. And that's really why leaders, they need really to read that signs and immediately to act. Sure. That's why when we mentioned that being close to the reality, it's the most important thing, because like I say, you don't normally get unpleasant surprises. You get surprises, but they are not so unpleasant. Huh?
Sure. Thank you very much, Mario. Thank you. And of course, while we were taking questions, our last guest walked in. He is the CEO and MD of PZ Africa, Mr. Ogale Eleni. Please put your hands together for him. Put your hands up if you were here last year, by show of hands. Did you listen to his session last year? What do you think? Great. It's good to have you back, Ogale. Thank you very much. And by the way, congratulations on the new promotion. It's for things like this that this platform has been created, and we look forward to more. As they say, the reward for good work is more work. May your efforts never falter. So while you were working up, the general question for the panel is, why has trust become the ultimate competitive advantage? And how can organizations intentionally build, measure, and scale trust?
Sorry, yeah, I have my mic. Thank you very much for that warm welcome. Truly appreciate that. Didn't put me on the spot at all. It's great to be back here. And first of all, I want to say hello and well done to all my distinguished colleagues on the panel here. Thank you to you and the organization for having me back. And also just want to say hello to everyone in the room. How you all doing? Fantastic. It's great to be back. I much rather prefer being part of a distinguished group and leave the heavy lifting to this exceptional gentleman. Last time I had to do a whole session, so I feel better this time sharing the load. It's really good to be back. And if I kind of take what you were asking, you're literally trying to understand where does trust sit, right? How do we look at trust from an organizational standpoint? I think that's one of the kind of key questions you're going for. And then the second piece is then, how do you measure it? How do you anticipate when you lose value, trust value, and then ultimately try to scale it? I must say, I got what we call in the local parlance, I got expo because I listened. I got to hear from Farouk and Mario and the team, and I learned a lot from them. And I happen to agree, because if I take the first part of the question, when you think, where does trust sit in an organization? In my experience, I 1,000% agree with Farouk and Mario. It doesn't sit in any brand campaign or sustainability report or balance sheet or P&L. Trust is nowhere, but at the same time, trust is everywhere as community currency. It is fully integrated and plugged in into our go-to-market and route-to-market ecosystem. And it's reflected and shows up every day in how organizations and businesses, how we deliver superior value to all stakeholders in the value chain. And I'm talking consumers, shoppers, customers, your trade partners, how you delight them and unlock that value that addresses their core needs and pain points. That is trust. It's nowhere, but it's everywhere, and it's foundational as a lifeblood of a business and how you keep your promise with your stakeholders. But that's a high-level answer, so let me try to break it down. We see trust coming to life in many areas, but I'll look at it within 4 areas, but I'll couch it under 2 umbrellas. Because I think when we're sitting in a route-to-market session, we talk the language of the consumer and the customer. And I think that's a way to bring it to life. So when I think about the consumer and how trust shows up and how we can execute against that, from the consumer, there are 2 things I think about is the first and second moment of truth. The first moment is when every consumer or shopper walks into the store and sees your products when they need them every single day. For us at PZ Customs, and in my entire career in organizations I've worked in, that's the first moment of truth when you win with the consumer and the shopper, and that's when you build trust. If they get in there as PZ Customs and they get to a store, the neighborhood, the open market, the wholesaler, and they can find Morning Fresh, Premier Cool, Customs Baby, Carex, Stella or Joy, if they can find that, then the trust contract is in the positive ledger, and we're delivering on trust. That's the first moment of truth, product availability. Still staying with the consumer, the second part there is the second moment of truth, which is when they experience the product. Do our brands keep our brand promise every single time to the consumer? Do we delight them? Do we deliver on the consumer experience? Do we meet their need states and their pain points? And in the rare occasion where we don't meet them, do we have a mechanism to be able to hear them out when they complain and quickly resolve on those complaints? It's the second moment of truth, and it's the product experience which is fundamental and absolutely pivotal. If you don't deliver that, then you start trust in your brands, in your business, starts being eroded with your critical stakeholder that is the consumer. So that's 2 parts under one umbrella, the consumer umbrella. The other piece is the customer, which I'm sure everyone in this room is absolutely connected to being the route to market session. And for the customer, it's how do you show up in the partnerships with the guys that enable us go to market, our distributors, our retailers, our modern retailers. Today, you have to show up as a company, an organization, and a business. You have to show up with predictable and reliable supply, reliable pricing, fair margins, support, executed 100% on the joint business plans and a true scorecard. If you do that with your customers, then the trust contract is refreshed every day. You raise the bar on that, and you deliver on trust. And then finally, and I spoke about this last year, and it's even become more critical now, still under the customer, the second piece of this is data analytics, transparency, AI, and that is under the customer. Because the more my customers, my store partners, my trade partners can trust that I bring value, to point them to the locations, the areas where store density meets income, right income levels, meets population density, and I can point them out and then we can unlock the right stores together. I can give them information about how distribution brands are performing, tracking time, coverage timings, coverage return timings. I can help them with that data, and then they can take that and execute even better and unlock value and get a significant return on their investment the trust handshake gets strengthened. So yes, when I think of trust, there are 4 areas in which we play. 2 of them sit with the consumer and 2 sit with the customer. Again, but ultimately it's a really, really soft, people will assess it as a soft metric and difficult to pinpoint. The way to think about this is, if at every point in time all your stakeholders keep choosing you and they choose to invest, consumers invest in you, distributors give you more shelf space, distributors give you more working capital, and they choose you every day. All stakeholders and participants in the value chain invest in you. It means you're executing well on your trust metrics, you're building trust with them, and ultimately you will win the sustained growth game with your partners and in your business ecosystem. So that's how I see trust and how it comes to life within the business that we deliver on. But then, ultimately, I can't measure it because it doesn't show up on any balance sheet. And this goes to your second question. What we do, and I've done this in multiple organizations, whether that's PZ Cussons or P&G or SE Johnson, is we track indicators. We monitor indicators that give us a sense of the things I just talked about, how trust is showing up. What are our distributor recruitment, engagement, and retention scores? Our fill rates, our supply rates, our service levels. What are the speed to timings on consumer complaints and resolution timings? You track all these indicators. On shelf availability, there's a multitude of them. It gives you a sense of how you're delivering as an organization and a business on the critical trust parameters and how it's showing up and how you're winning in the marketplace and in the total route to market ecosystem. Bringing it all together on the final piece of this question, which is, I've looked at those indicators. Ultimately, if all participants, and I said this before, if all participants in the value chain continue to invest in you, consumers choose you every day, customers reward you with more shelf space or more working capital, you're winning that battle. And I know we say it's hard to measure, and some people think of it as a soft metric. I will close by saying, trust ultimately is worth investing in. And the 4 points I mentioned earlier is where we then put our investments on. How do we execute to communicate with the consumer? How do we invest in our brands to make sure the product experience and promise is delivered every single time? How do we ensure that we have data investments that allow us to bring value to our customers? If we do all this, then we win the trust game. And I will close by saying, trust is a leading indicator and an infallible predictor of future revenue growth, future market share growth, future household penetration, amplification, and ultimately how you deliver sustained, profitable business growth in the markets of Nigeria and across all of West Africa. Thank you.
Wow. That's so loaded, I can't even summarize it. Well, yeah, like you said, if the customer chooses you every time, that is your measure of trust. And that's across the value chain. Your distributor, your shelf space, and your share of shelf is an indicator of the amount of trust bestowed on your brands. Thank you very much, Mr. Ogali. So now we move to the section of our personal questions. And once again, I'll start with our keynote speaker, Mr. Farouk. As vice chairman of a diversified conglomerate operating across multiple markets, you've built and scaled institutions across highly fragmented markets. From your experience, how does trust transition from being a relational advantage to becoming an institutional operating system that governs how large-scale enterprises grow in Africa? And I know you touched up a bit on this in your keynote. I didn't know you would go there, but here's a chance to dive deep into it enough for us to take more away from you. Thank you, sir.
It's people, the people that work with you, the confidence your team has in you, and the confidence your team has in your product, and the confidence your team has in your vision. If you are able to have a good relationship with the team that works with you, then you will definitely succeed in the market. And as we look at the whole trust dynamic and the growth dynamic of businesses like ours, we have a huge reliance on our staff in terms of input data and as well as our response. So, and when I say the team, both at the strategy head office level, to our sales team in the open markets, etc., everybody has a say and everybody has a voice. And that is very, very important, especially in Africa, where data may not necessarily be 75%, 80% perfect. And so when you now have the right people in the right places giving you the right information, you are quick to respond and you're quick to deliver. And so let us not, I guess for us in TGI, I have a huge respect and rely heavily on my team and rely heavily on that communication. And if there are issues that obviously you know you are the ultimate decider, but the scenarios that you take decisions on have to be presented by people who are trustworthy, people who are competent, people who are knowledgeable. And if you are into manufacturing, into distribution, and we have also started our own retail supermarkets, that entire, and when I say retail supermarkets, both on the FMCG and the agrochemicals and agro-allied products, it is very important that you ensure the right people are in the right places so that you can take the right decisions to push your business forward. Thank you.
Thank you very much, sir. And that's really a very important element. People is at the core of your architecture for building trust. And that, of course, is what drives your scale. Thank you very much, sir. That's very direct. My next question comes to you, Lionel. Danone, you operate in more than 120 countries and in 5 different West African countries. And I guess that's across languages, across cultures. The company is a global leader in fresh dairy products and plant-based foods and beverage. What is the biggest commercial decision your organization has made that strengthened long-term trust at the expense of short-term profit? And how well has this decision fared?
Thank you for your questions. Back in 2024 in Ghana, we had inflation around 50-60%. So there is always this pressure to say we need to keep that magic price point. We need to keep that magic price point. So usually you have 2 ways. Either you downsize your packaging, and we all do that, or you do productivity. Productivity has been the magic word to say we are doing a different recipe to maintain the price. So, and historically in this street vending business, every time we do price increase, we tend to lose 30, 40, 50% of the volume. The question was, how do we go about this? And how do we don't make the same mistakes that was done in the past? So we discussed with some of our retailers, and we told them, here is the issue. We have different options on the table. Either we do a downsizing, and we can maintain the price. Either we change the recipe, and we maintain the price. Or we actually improve the recipe, and we increase the price. So there was a lot of debate about this. And we took the decision when everybody was saying we need to maintain this magic price point to increase the value for the consumers. So we put more premium ingredients into the product. We increase the creaminess of the product. We increase the milk we are putting in the product. And we did a price increase. And for the first time in 10 years, when we did a price increase, our volume didn't move. We actually started increasing volume because we also lost consumers who didn't like the taste of the product for the last 5 years. So now we're able to recruit consumers who are coming back to the product. And the second thing we did 6 months later is to do an upsizing of the product without increasing the price. Because that's also what the trade partners told us, like, can we do an upsizing of the packaging of the product, but you don't increase the price? And I was like, are you serious? We are going to squeeze our margin. And the beautiful thing of that, we did that for 4 months. Again, we increased the base of our consumers, and we started growing by 30-40% just doing that. And since that period, we have been growing consistently between 20-40% for the last 30 months. So it has created a whole new playbook of upsizing at the right time. And because as well, Western company, we have in the mind that people are willing to pay for, they don't really care about the taste of the product. They just care about the face value of the price. But just change the mindset. Quality, you need to maintain the trust of the consumer with the quality. So now we're obsessed with the quality, and we do survey what people are willing to pay. What do they want to pay? And what are the pack size they are willing to pay? What is the equation? So now we run this type of survey so we don't automatically think, let's decrease price, let's reduce the packaging. So that was a complete different playbook that we apply, and the company has almost doubled the size in 2 years following this decision.
That's a very, a very new one in this market. I bet no prediction model would have told you that.
No, everybody
would
was
have
saying,
predicted
no, don't do
that
that
outcome.
Yes.
I mean, listening to you, I got scared. I was interested in the outcome, right? A lot of us would be scared to try that still. So my follow-on question was, where did this idea come from? What actually informed this decision? Because at the same time, every other person I know was downsizing packs, sachetizing, creating smaller pack sizes, and you decided to go the opposite direction.
Yes, because there's a point you cannot downsize anymore. As well, we did some insight that consumers want a bigger pack size. They find it's boring, it's too small. And we see it in a lot of snacking category that you reach a point that it's a candy for kids. Or you don't even see the size of the product. And we know it. I will not name some of the product, but when you look at 5-10 years ago, some of these units were much bigger, especially on the snacking. So it's also that this intuition that most FMCG are going too far into, we need to get it available every day at this face value. There's a magic price point of, it's going to be 1 Ghana cedi in Ghana, it's going to be 50 naira, 100 naira. But we have to accept that this magic price point are gone. So it's also the acceptance, some of the magic price points have moved, there's a new magic price point. So when you analyze, if I can go to this magic price point, this new one, with the right recipe, how many households are willing to buy for it? And most companies don't do that. But once you have the data and intuition, and as well we have 800 micro distributors in Ghana, and we have 2,000 across West Africa. And they're also buying in the plan that it will work. So they're also very confident that it will increase the number of consumers daily who are buying the product. So leap of faith, I put my head on the table, that is going to work. It has become the biggest success in emerging market in Danone worldwide.
Wow, that is one giant leap. Congratulations.
If you allow me, we were discussing this morning about, and also with Farouk. It's very interesting to see the diversity of, I don't know if am I allowed to?
Yeah, you can chip in a little bit.
It's very interesting to see the difference between countries in Africa, And we were just like talking this morning about, okay, you have countries where prices are even controlled by the government. And you have a period in Nigeria that it was very exciting, very exciting, with a devaluation of Naira that was almost forcing price changes. I will not say, we came from a price change once a year to a price change every 6 months, to a price change every month, and price changes every 2 weeks. Yeah. So it's really like the agility and the market that forces you to really go beyond any strategy that you might think about. Okay, no, it's the adaptation to the reality. So this morning we were discussing about that and how in West Africa you have different scenarios.
Yeah.
Because for example, the French-speaking countries, they don't have such a big problem with devaluation of naira. They are indexed to euro, which is much more stable, for example. So it has been quite an interesting story.
Yeah.
And because you are here, it was a very interesting period, huh? Very interesting period.
It was a race.
Especially on the seasoning side, was a very interesting war, let's call it.
Interesting. It's okay. I mean, the next question goes to you as well, so we would listen to you a little more. So Mario, you have operated at the intersection of manufacturing, distribution, and consumer engagement. In a market where relationships, local networks, community, and community trust remains fundamental to commercial success. In markets like West Africa, where informal networks still dominate distribution and consumption, how should large conglomerates balance systems with the preservation of trust based on informal ecosystem?
I found the question very, very interesting. So it's a strong question, and it's a very interesting because of that. So I frame it in three areas, three pillars. I first would like to break a little bit the rules and call it community commerce. Okay, that's the first one. My second point, my second pillar is disrupt a little bit, and I love that what Farouk presented. Traditional trades for me is not old trade, and I think a lot of people still think that traditional trade is old trade. So that's the second pillar. And the third pillar is trust ecosystems, they win. So if I start with the first one, community commerce matters. I think a lot of us, including me, I also had that idea in the past. It was the experience that made me change. That we assume informal markets are not structured. That's the assumption, okay? Especially for people they don't know Africa, they don't know these type of markets. They say no. Traditional informal market is not structured. I think the experience shows quite different. I would say, and probably this is provocative, that informal market for me is highly structured. The big question and the big challenge is that is structured based on trust, and that's why we are here. Because a market that is structured on trust is very difficult to operate, and I think that is the first pillar. The second pillar, traditional trade is not old trade, and I love this sentence because I think we underestimate a lot the power of our market, and there is also another point, and unfortunately we still have very high rates of illiteracy in Africa, and I think we keep missing the point, because even people that is not so well educated, not so much exposed, they really understand the business very, very well. They know what to do. And we miss that. And if we miss that, we miss a huge part of the market. So they understand the customers, they understand the trends, they understand the dynamics of the market. They provide flexibility. Let's be very honest. Without the flexibility of our retailers, how could we survive? They extend informal credit by themselves because, right, I know Farouk knows Lionel. Okay, I can trust them. I can give them, okay, come and pay tomorrow. And ultimately, of course, they also influence purchase decisions. We all know that, but we often underestimate that power, and that power is very big. The biggest problem is that how to reach there, and that's why trust needs to come. And I don't believe Africa needs copy-paste models. And I'm original Portuguese, I come from Europe, but I definitely don't think Africa needs copy-paste models. And a good example, it's modern trade. And it's not that modern trade is not a good idea or a good concept, or it's a model itself that can work. It's just that it has been imported and not adapted. And we have very good examples here. I think someone was speaking yesterday, maybe yesterday we were speaking about how the local chains, they start growing a lot in Nigeria. And that was coming already for 2, 3, 4 years ago. That they had that vision, and if we look at it, that's going to be probably the future.
Yes.
And people that did not understand that 3, 4 years ago, probably they lost the boat. Yeah, it's always possible to recover, but majorly it's going to be more difficult, and it will cost more, because that's the size and the timing of an opportunity. So I think companies that understand market realities, that they adapt and they are flexible. And why I say both, because you can adapt and you not be flexible. And you can be flexible and not adapt. You need both. If you don't have both, it's a big problem. And finally, that you really understand the customers and the partners. And I had the big opportunity and the privilege, and I still have, thank God, the opportunity and the privilege to work both on the local and on the global side of these businesses, either with PepsiCo or with Coke or with Promasidor or Group Castel now, etc. And why I say that is because I always believe that in a concept that I try to defend a little bit, that is what I call the global concept. And the global concept is quite interesting because, let's be honest, we all benefit a lot from global practices, and that's very good. And we can look for example, I work in PepsiCo, but I also work in Coke, so I can speak for both of them. We can speak about Coke. Coke is probably the best example. After, I think, 125 or 30 years, they still really take route to market very, very, very serious, you know? And they really share global practices and global standards. And I think global capabilities, that's the first point for me, help us to understand what I call, some of the people that knows me, I use a lot this word, what good looks like. Normally people speak about picture of success. I like to speak about what good looks like, because I think what good looks like is a little bit more spread, you know. Systems, they help us to definitely operate with more consistently. And finally, standards, they help us to have discipline. And it's, of course, important to have flexibility, but also some discipline. So finally, we can have all this global support, but if it does not have local relevance, local importance, if it does not have local proximity, and especially if it does not have local trust, for sure it's not going to work. So I think it's this combination between what are global practices, global standards, and local relevance and local adaptability that make us win on this market. And I heard people, and it's very great that we talk about technology, and I love technology. I'm a very big fan of technology. I think technology today, rapid transformation, everybody speaks about artificial intelligence, etc., which is great. I'm very curious about that, and I think it's really, really important. But for me, I keep saying that it's an enabler of our business. It's mostly an enabler, and I think it was even Farouk that mentioned. I agree with him. It will never replace relationships. For me, relationships are the most important thing. Of course, technology will help us to what? Especially strength, trust. Scale, of course, execution and capabilities. Improve our execution. Obviously, it will make our life easier, but the relationship needs to be there. And finally, to blend it, all of this works and operates in what I call the trusted ecosystem. And the trusted ecosystem is like everybody mentioned already. It's from the research even, from the manufacturer, from the distributor, from the retailer, from the consumer. But introducing now the community, and I think you mentioned that. This is the community that is really going to make the difference, because we can do all this, but if we don't integrate on the community, it's not going to work. It can work for a while, it will not work in the future. And the difficult part of all of this is that there is no mechanism of control. You can have some ideas, you can try to track, but this is really a little bit like endemic. You know, it goes across all the value chain. So no hierarchy, no control, no bureaucracy. It just comes, just flow. And that is the dangerous part that makes us a little bit scared. How can we really control that? So finally, I think this is the way I have approached your question. So yes. Community commerce, traditional trade is not all trades, and trust ecosystems, they win.
Thank you very much. Community commerce, very important. I mean, we spoke about this yesterday. Something ironic you mentioned is the need to understand local relevance when you have global strategy. In my industry, which is technology, we come across this quite a lot, where strategic or technology decisions are taken at global level, and then you're just expected to implement what has been agreed at the global level. So over time, we have promoted the idea of differentiating as needed. You have a global framework, but you adapt locally to allow you optimize. You might still end up reporting the same KPIs, but you're capturing it in a completely different way. So thank you very much. And one thing again you mentioned as important is traditional trade is not unstructured. It's structured in a way that we don't understand. Is that correct?
That we are really trying to understand. And I think the companies that are able to decode, they are going to win.
Thank you.
I think that's really the most important.
Thank you so very much. Thank you. And my last question in this session will go to Ogali himself. The question is, what are some of the key mistakes that you have identified in your roles that unintentionally erode trust within your route to market, and what have you done to remedy them? It's a bit of like reporting your failures, isn't it?
Yeah, it's like signing a report card here. I feel judged. No, thank you. Great question. And once again, I say it's an absolute learning experience. Being part of this panel, listening to everyone talk. But also, again, want to appreciate each and every one of you for coming out, because it's an investment of your time, and I hope you're getting as much as you invested in, but really appreciate the audience for being here. Before I answer that question, when Lionel was talking, I was getting I started experiencing trauma, because the back half of 2023 and 2024, I think that was it 23 or 24? There was a year I had 30 price waves, different price waves. The consumers and the customers certainly didn't love us, but it was what we had to do to navigate the compelling environment, the significant headwinds and challenges we had in Nigeria at that time. So it was interesting hearing Lionel refer to that, because that was a really interesting time in Nigeria. We've had that in Ghana too in the past, had that in multiple parts of the African market. But back to your question, some of the missteps we see, and I've seen in my experience in my career, that erode trust, route to market. I think the first thing to really establish is, and this is a West Africa route to market program, and a lot of you all lead your route to market organizations and projects and businesses across West Africa. In West Africa, maybe separate Ivory Coast a little bit, where modern trade is a much bigger share of the entire retail trade profile. In Ivory Coast, that'll probably be about 40+% modern trade. But the rest of Africa, which is the bulk of West Africa, Nigeria, Ghana, what have you, Cameroon and what have you, is 80 to 90% of FMCG sales goes through the informal trade. And when that happens, trust then becomes absolutely pivotal as the most critical currency for transactions. Because it's so informal, and all the panel members have talked about it, trust becomes that community currency that powers transactions. So it's critical to protect it, to cherish it, to nurture it, nourish it, and ensure you can keep scaling it in a way that avoids erosion and avoids you losing value as a business owner or as a business leader. In my career, and this has been consistent, again, like I said earlier, whether it's Procter & Gamble, SC Johnson, PZ Cussons, what have you, a lot of the organizations unintentionally make the same mistakes and missteps that then erode trust. We don't have all the time in the world. I will respect your time. So what I will do is just maybe call out some of the three of the most critical ones. One, mistaking information for alignment. Two, inconsistency in execution standards. And three, slow or delayed responsiveness to market signals. And this I've seen consistently in my time and my work across my career. Again, most of this unintentional, not deliberate. It's what you call unintentional trust creep that erodes the trust with that ecosystem that is absolutely critical in West Africa, where 80 to 90% of FMCG sales goes through that informal market. And so those three things I mentioned, let me, and he asked me to mark my report card or present my report card. I've also seen it in my organization, again, unintentional. So what we do is, it's important to quickly identify it, diagnose it, and then work to remedy it, disrupt it, and then ultimately turn it to a competitive advantage. So I said three things. The first was, when you think about the 3 points that I mentioned, I said, I led with information, mistaking information for alignment. You all have lived this every day when you deal with your distributors, your modern retail, your trade partners. Often we think we communicate, whether that's pricing, business plans, agreed projects to accelerate coverage, distribution, deliver a superior shopping experience, and we think it's good, we got it. We spend a lot of time creating those decks, those presentation decks, those PowerPoint decks, those materials, and we communicate it and we think it's good. And then we leave it and get caught up in all the work, all the busy work in the back office. And we get distracted from what needs to happen every day. But no, it can't be one time or 2 time or just periodic engagement. It has to be an all the time, consistent, persistent nourishing of that engagement. You need to nourish that relationship. The relationship with your distributors, your modern retailers, your trade partners, all your stakeholders in the value chain has to be a husband and wife relationship, for lack of a better terminology. You have to cherish them, nourish them, dare I say romance them. It's leveraging your tools, your joint business plans, your true scorecard, your quarterly connects, your monthly connects, to ensure that you're critically aligned on what you're communicating. You're clear on the joint goals, you communicate when you deliver on your share, and you track them delivering on their share. And so we've seen these mistakes where we do it one time, but the way we've corrected it is we've really rebuilt and re-strengthened our engagement models, ensuring that we're consistently holding the hands of our partners as we execute in the marketplace. We deploy field teams to lead and own the relationship with those partners, to live with them, to ensure we can execute. And when you do that, you build trust with your customer partners. They will prioritize you, give you a more than fair share of their working capital investment, and together you win in the marketplace, and ultimately that then translates to you executing in a way that then gets trust with the ultimate bigoga, which is the shopper and the consumer. So critically, is to always watch out for thinking information means alignment. And once you see that gap, which you will see, is to course correct it by rebuilding your engagement models and the frequency of the engagement, the interaction, and putting your structures and your resources. For every distributor, I have almost 100 distributors across Nigeria I have field selling teams that are located there to own that relationship and ensure that the communication and the plans and the business plans are top of mind every day with those partners. And this is done on not just on a distributor level, but on the channel level, whether it's open market, modern retail, neighborhood stores, groceries, kiosks, and tabletops. So that's one. Two, if you think information means alignment is a challenging one, another one is inconsistent execution standards. And again, there's so much we have, and you guys live it every day, there's so much we have to handle and chase and deliver on, multiple competing priorities. It's easy to miss and not know when maybe the way you execute in Lagos might not be the way you execute in Abuja, or might not be the way your stores or your businesses look in Maiduguri or Kano or Enugu. The way you execute in Accra might not be how you show up in store, in the marketplace, in Sunyani, in Takoradi, in Tema. Or the way you show up in Abidjan is not the same way you show up in Yamoussoukro. Or your standards in Yaoundé is not how you land in Douala, if you're thinking about Cameroon. However, I have one thing to say to you, and this has been true every single step of the way in my career. Your brand promise is only as strong as your weakest execution point. I'll repeat that again. Your brand promise, the delivery on your brand promise is only as strong as your weakest execution point. So what that means is no matter all the fantastic ideas, what you put into that product design, the formulation, the packaging, and your thoughts about how you invest behind driving it, when the consumer, the customer, the shopper sees it at one point, it's only as good as it is in your weakest link. And that means you need to ensure, as much as possible, you focus on ensuring consistency of your execution standards. If I'm in Cameroon, my products should show up in store in Douala the way they show up in Yaoundé, the way they show up in Bafoussam. If I'm in Accra, it needs to be the same in Tema, Takoradi, Sunyani, Koforidua, Ho, or Hoi. It needs to show up the same way. And for us, we've seen that happen too. Because it's easy from the head office to be able to drive what I need to show up in Lagos. But then, when you think about some of the challenges you might have security-wise in the Northeast and other parts of the country, or in the East where you know Mondays are not really work days with some of the challenges they've had there, it's easy to let those standards slip. So we've identified that, and when we've diagnosed that, we've made sure we've come up with the following ways to address it. We refresh our execution standards. We ensure that it's fully communicated and frequently communicated to all our teams. We tie that to the performance management systems so that our organization, our employees, our people, the great people. By the way, and a shout out to any PZ Customs people here, I have the absolute best organization in the world, bar none. I will brag about them. But it's clear that their rewards are tied to a performance management system that is linked to the execution standards we're trying to drive. And when you have that line of sight between performance management and execution standards, there's a clarity in the standards, and then the rewards tie in, and you drive that relentlessly every day, you are able to ensure that you remove that weakest link problem. And then that means your brand promise shows up every day in its strongest form in every market, every channel, and you every day deliver your promise, which enhances the trust, builds the margin of trust, and reinforces positively the trust contract with every single stakeholder in your value chain. So that's the second one. The third one I said very quickly was response timings, slow response timings, or delayed response timings to market signals. Let me just take a quick step back and put this to you. In West Africa and Africa today, the market moves at a much faster pace than it did 5 years ago. Heck, it moves at a much faster pace than it did 2 years ago. Dare I say that it did 6 months ago. Consumers Consumer behavior is evolving rapidly. 5 years ago, beauty as a category was not where it is in Nigeria today or in Africa. It's exploding today. Digital, the amount of transactions being finalized at mobile, at digital, is exploding exponentially. It's 2x, 3 times what it was 5 years ago. Consumer things are changing. Competition, your competition, our competition, is acting and moving quicker. And your customers and stakeholders, because of this vibrant ecosystem, require, demand you to react faster and respond faster to their needs. So it's a vibrant ecosystem, and a lot of times what we see is we spend time in our ivory towers of our headquarters, spend time with the busy work in the back office and internally, and forget that the battle is won. Sales, revenue, profit, cash flow, market share is won in the marketplace. And I've seen that in my career, and I see it every day. And you need to keep checking, no matter how good you are. Keep checking, because it creeps up on you. And we've seen and identified when that has happened, because the trust is broken when you're not able to respond to what your stakeholders need, when you're not able to react to competition fast enough or meet your consumers at the pain points of the moment. What we've done to address this in my report card, and yes, I'm guilty, and my organization is guilty, but we quickly understand it, and what we've done to do it is strengthen our analytics tools, our digital tools, build a retail and distribution management and signaling ecosystem that allows us to get this data from the marketplace fast. Our people get us competitive intelligence very quickly. We have a market sensing initiatives that are put in place to get it. We have consumer feedback options that come to us quickly. We build all of this to ensure that this gets to us as quickly as possible, with the one goal of being able to bridge the gap between a market change or need and our ability to respond quickly. And so we do that, and we do that well. We are then able to meet the consumer at the point of needs. And so I will close, because I've landed as 3 points, right? Is do not mistake, and we all do, don't mistake information for alignment. Cut out the kinks on your execution standards consistency. And then 3, ensure we bridge the gap very quickly between market signals and our ability to respond and provide value to our consumers. Ultimately, pulling this all together, the biggest thing I've seen, if you summarize it and pull it all together, that erodes trust is when the stakeholders in your value chain, whether that is shoppers, consumers, customers, trade partners, feel unheard, feel non-responded to, feel not listened to, and to keep in line with my husband and wife paradigm, feel unloved. The way to remedy this is to have a mechanism in place that consistently understands and sense checks where that is and responds quickly, and responds fast with providing value back. And if you do this consistently all the time in a 360-degree way, relentlessly and persistently, trust will naturally grow and will naturally be scaled, and you as a company and your businesses will have an enduring competitive advantage.
Thank you very much. Thank you so much. One thing you'll quickly see is you know a salesman when you meet one. He surgically avoided the questions. So I'll try to translate what you've said, right? You have said some of the mistakes that have been made before is you have taken information to mean alignment. Is that correct? Yes. And
Yes, sir.
At some point, there has been some ineffective execution of the strategy. Thank you very much for that. Always
Welcome.
a salesman. Thank you very much, Ogali.
Thank you.
So, while we were talking, the audience was voting on a few questions. So we've got the fourth question with 40%. And
40%
just
of the
two
attendees.
panelists would have to take this, and the other 2 panelists will take audience questions, because we are pressed for time. In one sentence, what uncomfortable truth about our industry is preventing trust from becoming a real competitive advantage? And I think Leonard to take that.
So I will tell you a story how when I was global route to market, we lost $200 million net sales in 12 months based on trust.
Wow.
It was in Morocco. I know I'm going to take more time, but it's a very interesting story. I don't want anybody to repeat this mistake again. It was in Morocco in 2017. So basically, we started losing $1 million sales per day. It all started with, we used to have a survey, an external survey, measuring what is the trust level that we have a trade partner with the retailers. So we cover in Morocco 100,000 point of sales. We deliver 50,000 twice a week. What happened is like, for 3 years, we stopped paying the subscriptions. It's a syndicated survey made by an external agency that rank the 15 FMCG in the country. What we don't realize, we are slipping every year by 3 rank. So we move and we're at the bottom. What happened when a crisis started in the country, we realized that we are the least preferred FMCG partner in the country. So the retailers started boycotting us because when we went deeply, and I took as well accountability for it because route to market was the guardian of also measuring this external trust level. And we were the least preferred sales team and logistic team in the country. Actually, retailers hated us. We were arrogant because we have 70% market share. So, complacency started pulling into the system, but the retailers didn't like us. So as soon as they had an alternative, they started delisting our product one by one. As we mentioned, capital trust is the most important, but the bitterness accumulated over 5 years blew up. It took us 5 years to recover the size of the business. So you have to imagine a company that's been built with an infrastructure for a $600 million business suddenly shrunk to barely 300 million. It was a disaster. So trust has to be, what is preventing company is measure externally how the trade perceive you. From sales execution, from logistics, from all the service you provide to the trade. Do it externally. So now I have learned my lesson. It was almost 10 years ago. In all my new role, I always do this survey. Commercial director don't like it, I can tell you. Marketing as well don't like it. Logistics don't like it. We are all perfect. We have all nice dashboard in the office. But believe me, when did you measure last time? How do you rank versus other players in the market in terms of preference? How do people love you or hate you? And I did it in my role in Ghana and in Nigeria. And people were shocked. People don't like us. That's the reality. The good news is when you know it, you can act on it. So measure externally. Don't hold this back. It's painful, but that's the reality. Get measured out by an external source.
Thank you very much.
Thank you very much.
Thank you
for that.
So you have answered on behalf of all the panelists. So put your hands together for all of them. We're coming to the audience now.
Good morning. My name is Ihai Achom. I work for Pika Insights. I'm the head of growth for Pika Insights. But my question will go to Mr. Farouk and Mr. Eluani.
Please make it short and straight to the point.
It's a short question. If you can get last mile retail data, 100% last mile, what would you do differently to what you're presently doing? I know that you have salespeople that collect data for you, and you have other people that collect data. But we know that most of your products go into the informal market, which is like 90%. And your salespeople cannot possibly give you 100% data in terms of real shops, in terms of more shelf life, and in terms of what competition is doing against your product. So if you have 100% reliable last mile retailer data today, what will you do differently? That's my question. Thank you. Yes, Mr. Farouk first,
Right,
then you.
Mr. Farouk Gomel, the professor of the school, and then the dean will follow. Thank you.
To be honest, I don't think I want 100% data. Because, you don't want it. And the reality is this. there's the gravity side of business. You go to places you don't have distributors and you see your product. And you go to countries where you don't have anyone and you see your product. Do you try to take it out and say, let me go? If the product is there and it is doing well and it's finding its way there, let it slide. One of the problems we have today is actually there's too much information. It is like literally they are bombing your brain with data and information, you know, and you have to, like, at one point you have to say, you know what, I want to sleep. Right? So my own view is I need to also, and it comes back to that last question that was answered. And maybe if I could paraphrase it, Mr. Parent, is there has to be a point where your gut also has a say. You sit at a decision-making level because of that. The final decision maker can either take a position on data or take a position on gut. And he took a position on gut when it came to pricing, and he took a position on data in Morocco. And he followed the data, and he found out that nobody liked him. But he took his gut feeling and went to increase volume and increase price and increase quality, and he won. If he had followed data, that's my own view.
Thank you.
Thank you very much. I'm afraid that's much we can take. Mr. Russo, you want to add to it?
No, it's okay.
All right.
I
So
mean,
you can wrap it up.
Yes, that's absolutely.
You wanted to add to it?
No, I would just say that's an uncomfortable truth.
Oh, okay.
I mean, to buttress what he has said, and I quite agree with him in the sense that in my industry, we sell data, right? We sell assets that gather, organize, and present data to help you make informed decisions. But we've also grown to understand that even in the age of AI, where everybody is jumping about and trying to layer AI over what you do, we understand the role of human intelligence. And it's only when you layer this over artificial intelligence that you begin to get augmented intelligence. So it's not having too much of data from one lopsided path of the stream. It's ensuring that you are adequately balancing insight and intelligence with those data points that cannot be stored in a database. So thank you very much. This has been a very rich panel. I would allow Farouk to give us, being our keynote speaker, to give us a final word so we can move on to having our tea break.
One very short sentence from each of the panelists in closing. So I'll start from the MD of PZ Cousins, Eloeni. Hale.
It's been an absolute privilege and delight for me to spend time with you guys. So thank you, and I hope this has been enriching for you. I look forward during the breaks to chat and get to know you all a little bit better. Thank you.
Thank you very much. PZ Cousins, Vice Chairman, TGI Group.
Same here. I agree with him.
Same as above.
Yeah.
All right, Mr. Mario Russo, MD Castle Africa.
I just wanted to say what was my uncomfortable truth is that for me, the market does not experience strategy, the market experiences execution.
The market experiences execution and not strategy. Strategy is English and vernacular is more important. So says the professor of international business strategy, IBM. And lastly, the parents of everybody who is here.
No, look inside out. You know, I told you the story of Morocco. It has marked me for life. Look outside out. And data is everywhere, but human intelligence is stronger than data.
Human intelligence is stronger than data. Data is everywhere. On that note, ladies and gentlemen, I'd ask of the panelists to please rise. Step forward for a group photograph. Close the gaps in between yourselves. And the photographer will shoot them. Photographer, shoot. Mr. Gutson, be in the middle. You can drop your laptop so that you can be able to strike a proper pose. All right. Monsieur Parent, you need to step back a bit. Mr. Lionel Parent, thank you very much. All right, one after the other. Thank you, Professor Farouk Gomel of the International Business Management and Strategy School. So we're setting up a business school after this. Professor Farouk Gomel will be the dean. Russo will be one of the HODs. Ohale will be one of the HODs as well. And Lionel will be one of the HODs as well. Thank you very much, Monsieur Russo. Merci beaucoup. Mr. Lionel Parent. Merci très beaucoup. Congratulations and thank you. And last but not the least, Managing Director, PZ Cousins Africa, Mr. Ohale Eloeni. Thank you for well-delivered sessions. Please look at the cameras. Please look at the cameras. Thank you very much. That was very well done. And thank you, the audience, for your time and attention. I'll take one moment to emphasize the need for trust, as they have all spoken about trust, trust, and trust. If your people trust you, you will dominate the market. And if you dominate the market, the returns on investments will be huge. And as many of us can remember, trust is so important to some companies that they add trust to the name of their company. For instance, Standard Trust Bank. For instance, Continental Trust Bank. For instance, Guarantee Trust Bank. For instance, Fountain Trust Bank. For instance, Trust Bank of Africa. For instance, Daily Trust newspaper. So trust, trust, trust is one of the key things that we're taking away from here this morning. I'll take a moment to acknowledge all of our partners and sponsors in no particular order of preference. TGI Group, TGI Group, TGI Group, an international investment firm with interest in Africa, the Middle East, Asia, and other emerging markets. And we've listened to our keynote delivered by the Vice Chairman. We also have Kerry, is a world leader in tasty nutrition solution, committed to helping nourish people, society, and the planet with great and lasting, nutritious, and sustainable products. We have Stafford Irish Spirits, premium Irish spirits dedicated to crafting beautifully balanced small batch gin and whiskey. And we'll have an opportunity to taste some of their products during break and during lunch. And a brand that many of us grew up knowing, Ovaltine, they're still very much in the market. They've been around. It's now part of the Twinings Group, a globally renowned tea and well-being drinks brand with a heritage spanning, wait for it, not 100, not 200, but 300 years of innovation. And the master blending expertise. He sold the first brand in 1706. Twinings has remained committed to perfecting the craft of creating exceptional beverages that energize, refresh, and comfort consumers. We also have PZ Cousins, whose MD we just listened to, a leading international consumer goods company with a proud heritage dating back to 1884. It was founded in Sierra Leone, and today the company is listed and headquarters in Manchester. And that's one of the reasons why Manchester United is always one of the top teams in the Premiership. They didn't have to wait for 22 years before they won a cup and having to lose the second cup. Ladies and gentlemen, put your hands together for Manchester, where PZ is located in the UK. You're putting your hands together for PZ, not for any other team. Thank you very much. And ladies and gentlemen, we also have Radiance Money. Radiance Money is the brain behind Radiant Life Express, Radiant Life Financial Services Limited, an authorized digital financial platform. We have Chi Limited, CHI, CHI, CHI. We have three-line sponsor. Chi are the makers of the renowned Chi Vita and Hollandia brands. You know them. And they nourish Africa for a brighter future, and was established in 1980 We have 3Line, a financial technology company dedicated to driving financial inclusion one transaction at a time. And of course, we have the brand that made milk not a luxury but a staple in every home, Promasidor, makers of Cowbell, a leading African food and beverage company dedicated to providing high-quality, affordable products that bring practical enjoyment to millions of consumers. And of course, we have Right Foods. Right Foods, we see them everywhere in our shops, in our kiosks, in traffic. They're the makers of that brand of sausage that we all cannot resist. Ladies and gentlemen, established in 2007, Right Food was founded with a bold ambition to set new standards in the FMCG space. We have International Distillers Limited, a proudly Nigeria beverage company and trusted name in the production and marketing of both alcoholic and non-alcoholic beverages. It's time for a break. Let's have some music. Thank you.